Good afternoon, everybody. How are we doing today? Appreciate you guys joining us here on Friday afternoon. If I can just get a quick audio and video check, let me just type in the box there. Let me know that you can hear me and that you can see my screen, that we're coming through loud and clear. I'd sure appreciate that. So I know that we're up and running and can move forward here. All right, perfect. Thank you, Willis. I appreciate that. All right. Well, welcome everybody to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com, and today's webinar is brought to you by and hosted by Nadex. So we appreciate them having us here today. And today we're going to talk a little bit about using the Nadex Strike Ladder for trade management. So, we're not going to spend a lot of time on, some of the basics, or we're not going to jump in deep into, crazy complicated strategies or systems. And for some of you, this might be a little elementary. You might understand this and know this. But for those of you especially that are new to Nadex, I'm really hoping that at the end of this webinar, it's kind of an aha moment for you, or a couple light bulbs go off, and you really look at this Nadex Strike Ladder in a complete new way, that there's a lot more to it than you ever realized there was. And so that's kind of the goal of today's webinar is, especially for those of you that are new, by the end, I want you to have a couple aha moments here and really feel like you walked away learning something new and knowing something that you could literally get off this webinar from, hop on the Nadex platform and start to use in a whole new way right away. Okay, because that's kind of the point of these webinars, is to give you something practical that actually helps you, in your day-to-day trading with Nadex. So to kick us off, as always, let's get our disclosures knocked out here. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Also, guys, anytime that we're on a webinar and you see me go to the Nadex demo platform, you see me enter a trade or, exit a trade using the order ticket, that's in no way a recommendation or advice for a trade. All right, it's simply an example, to help you really see and visualize what it is I'm teaching you, or to help you see how to use, the functionality of the Nadex platform and the ticket submission. So just keep that in mind. But again, as always, information here is for informational, educational purposes only. All trading decisions are your own decision. Okay, and as always, past performance not indicative of future results. So let's talk about Nadex real quick. If you're brand new, make sure to hop on over to nadex.com, and they got some great information here for you on their page. You can go to these top options here and get some information, learn about Nadex. Basically, Nadex offers two different products. They offer binary options and spread options, and you can go through each of these tabs and get some general information about both of those. You can go up here to market news, get some ideas of what's going on, in the markets, maybe help you formulate some trade ideas for yourself there and some good plans. Right here under Learning Center, all right, if you go right here to, well, first of all, you've got videos and trade examples, all kind of great free information here. I got to give Nadex a lot of props. They do a lot for their members, lots of free education, free information, some great tools. I'm going to show you some more of those tools in a minute. But right here, if you go to webinars, this will show you all of the upcoming webinars for you to get registered for and get signed up for. I'm sorry, right here, if you click upcoming, this will show you the upcoming ones to get signed up for. If you go right here on demand, let's say you've missed some webinars, you haven't really been with us before. If you just click on demand and you've got different subjects you can choose from here, different categories. But you can come down here under presenter and you can find us right here, Apex Investing. And this will be a recording of all of our past webinars, all right? And we kind of cycle back through, all right? We kind of start with some of the basics. Maybe some of you are brand new and you don't even really understand what is a Nadex binary, what is a Nadex spread. Well, you see right here the first two webinars, Binaries 101, basics of Nadex spreads. This is where I kind of hold your hand and walk you through what is a binary or spread. How does it work? How does it not work? How does the value of it, set the foundation. Then we go from, how to choose the right one. Do you really understand risk and reward? What are some of the top mistakes? And then we get into like different strategies and systems and ways to trade. And it's really kind of starts with the foundation and build. So there's a ton of great information in here for you. Make sure to go through and check these out. It's a totally free section for you of information. And that's really what we're here for. Okay. That's why Nadex has us on here is, we're traders just like you. We're here to help you understand who and what is Nadex, how do the products work, what are some ways you could take advantage of them and incorporate them into your day-to-day trading. And while you're learning to do that, something that's very, very important. If you go right up here to trading platforms, okay, you can go directly to the online trading platform. They've got some mobile apps right here, demo trading platform. Nadex will give you a free $25,000 demo account. All right, all you gotta do is just pop in some quick information here and hit open my practice account. And it's a great place to get familiar with Nadex, get familiar with the platform, how it works, entering and exiting orders. It's the perfect place for, when you're learning something new, or let's say you're testing out a new strategy and system. Don't go do that in your live account and waste your, and use your live money while you're educating yourself and you're making mistakes and you're working out the kinks. Anytime you learn a new system, you're going to work out the kinks, right? Okay, it's a very expensive place to learn a new system with live money, yes? Utilize your demo account for that, okay? And once you press submit here, in just a couple of moments, you'll get a email from Nadex with a temporary password, and you can log right into the demo platform, okay? Once you log into the demo platform, go right up here to my account, and then you can go down here to settings and password, and you'll be able to change that temporary password to a password of your choosing, okay? If you don't have a demo account, like stop right now while we're on this webinar and get one, okay? Like sign up for one right now. It'll take you, a minute, all right? And make sure you have one. Definitely utilize it. Yes, you can have a live account and a demo account. In fact, I've had one of those for years, right? I have certain systems that I've mastered and I trade all the time in my live account. But when I'm testing something new or adding on a new strategy or system, I don't go straight to my live account. I'm still testing that on the side in my demo account until I work out the kinks, until I become profitable in demo with that strategy, until I've got it forwards and backwards. Then I move that over into my day-to-day trading in my live account. Adding on a new test, I'm testing that in demo. Okay, it's just kind of part of your path and your ongoing cycle. So utilize that demo platform. Great place to get familiar with, the different binaries and spreads that Nadex offers, the different contracts and expirations and how that works, entering and exiting orders, the ticket submission form. So definitely use that. Again, major kudos, major props to Nadex for all that they do there, okay? Again, my name is John Skelton. I'm with Apex Investing. Apex and Nadex, two complete different companies. Right, Nadex is an exchange. Apex, we're an online education company. We've got now over 25,000 members. We've got strategies and systems and indicators and live trade rooms and mentor groups and all kind of stuff. A lot of our strategies focus a lot on risk management and probability. That's why we love the capped risk products of Nadex. But, we're a Nadex education partner because we're traders just like you. We trade Nadex binaries and spreads every day ourselves, every day in our trade room. And like I said, we're here just to relay some of that information to you, educate you, give you a few ideas on, how we utilize Nadex to help you formulate some ideas about how you can. I've personally been with Apex now for about 4 years as head of operations. I've got a background, as a stockbroker and in the banking business. Banking industry. I'm an educator, but again, trader just like you. Okay, so that's kind of the who and what and why we're on this webinar. But enough about that. Let's move on and dig in here. Like I said, we're talking a little bit today about how to use the strike ladder for, trade management, setting take profit orders, and kind of getting you to think outside of the box. All right. And think beyond just 0 or 100 value at expiration, okay? And you'll understand what I mean by that a little bit. Like I said, we're not going to be digging in, spending a ton of time on the basics today, okay? I mean, if you are new and you don't quite have down the basics of binaries, I just kind of showed you right there where you can go to the on-demand and catch up on some of that, okay? But, for the basics, okay? you can go back there. You can also go watch webinars about, probability and making sure you understand, what proximity is and time decay and, how the binaries really work. All right. So let's go back to, I want to kind of visualize this for you. I don't want to spend this whole webinar just talking at you and showing you PowerPoint slides. I want to really help you visualize some of this. So let's go back to the Nadex platform. And let's go right here to indice binaries. And let's just choose Wall Street 30, okay, which is a derivative of the Dow, okay. Let me update this. Let me refresh because we just had some new ones come out. And let's go back to binaries, go to the Dow, and let's check these out right here, okay. These binaries here opened up at 1 p.m. By the way, guys, any time you see a time listed on Nadex, okay, AM or PM, it's always in Eastern time, just so you know that. Okay, no matter what time zone you're in, what you see listed here on Nadex is, New York Eastern time. Okay, so just to clarify that. So here are the list of binaries that expire at 3 p.m. on the Wall Street 30. Okay, this here is what we call the strike ladder. All right, what do I mean by that? Okay, let's get a little basic here real quick. Well, if you understand binaries, you'll understand that each different one of these, okay, is a different binary option contract, right? Each binary option contract has what's called a strike price, and you see it right here, 25.059. 047, 035. Each one of those is a strike price, okay? And if you understand the basics of a binary, think about the word binary. What is it? Well, in a nutshell, it's yes or no, true or false, 0 or 1, right? All a binary contract is simply a statement, okay? And for example, if I open up this one right here, if I click on it, the ticket will open up. And what is this binary? So I just opened a contract for this, or a ticket for this binary contract here. What is the contract? It's a statement. The statement simply says the Wall Street 30 will be greater than 24,999 at 3 p.m. It's a statement. Wall Street 30 will be greater than this price at 3 o'clock. Yes, it will happen. No, it won't, right? That's it, okay? If I think, yes, I think that statement is true. I think that statement will happen. I think it will be greater than that. Then I would be looking to buy here on the offer side, okay? If I think, no, that statement is false, I think, my strategy, my system, my indicators is telling me I think the market would go down. I think it'll be less than that amount at 3 p.m. Then I'd be looking to sell. All right, and that's just in a nutshell. Okay, and I've got a lot of different strike prices to choose from to make that determination of true or false. And notice here on the offer side, this is what I can buy for, this is what I can sell for. And if we understand the basics of binaries, we know that binaries have an expiration time. You see that over here. These here expire at 2 o'clock, these at 3 o'clock, these at 4:15, okay? And there's always new binaries coming out and so on. So I've got a lot of different options there, okay, to choose different strikes. Now at expiration, a binary is either worth what? Either 0 or 100. At expiration is kind of an all or nothing. Now I can exit early. I do not have to hold a binary until expiration. I can exit early, and I can exit early to protect profit. Let's say I buy something for $50. The market is going up. It's now worth $80. Well, I can hold it till expiration and let it expire being worth 0 or 100. Or if I bought it for 50 and now it's at 80, I can exit early and take that $30 of profit, right? Or let's say I bought it at 50, thinking the market's going up, but the market's starting to go down. Well, I can hold it to expiration and let it be worth 0 or 100. Or, hey, I bought it for 50. The market now seems to be going the other way. I was wrong. It's now only worth 20. So I could exit early for a $30 loss. That way I only take a $30 loss instead of the full $50 loss, right? So we can hold to expiration or we can get out early. And if we're looking at this strike ladder, we can see right here how there's a lot of different strike prices to choose from, and there's a lot of different prices to either buy or sell. Okay, and we see that they kind of start low and they work their way up. So let's just take a step back, and what do we see here? Well, imagine you drew a, let's just focus on the offer side for now, the buy side. Okay, if we drew a 0 right here, right, and we drew a 100 down here, that kind of makes a little sense, right? At expiration being worth either 0 or 100. And between now and expiration, the prices can fluctuate based on the movement of the market, right? Let's say I buy something for 50 bucks and the market starts to go up in my favor. Well, that binary I bought for 50 is going to slowly work its way to being worth close to 100. Yes? You can also kind of see where it slows down. Like you see here, you go from like 20, 30, 40, 50, 60, 79, 87, and then it just jumps to like 87 to 92 to 94 to 96. Like, see how it's kind of slows down right here? You see that? Okay. Or up here at the top, you got like, 50, 40, 30, 20, 10, and it's like, 4, 2, 1. So the closer you get to, 0 or 100, as it were, okay, they kind of start to slow down the closer to expiration or closer to the top or bottom. Okay, can you visually see that? Is everybody with me so far? Can you kind of see how in the middle here is where the values move the fastest? And that's just how options work. That has nothing to do just with Nadex or just with binaries. That's how options work in general. Okay, so a lot of people, when they're first, introduced to Nadex and they're first looking at the platform and at this strike ladder. Again, this is what we call the strike ladder because it's kind of a ladder of prices here, right? You have this kind of newbie concept of, well, this is my menu. This is my menu to order off of, right? Like I'm at a restaurant, I'm just looking at all this is a menu. Well, and in a sense, it is a menu, okay? Because it's like, hey, if I want the 3 p.m. expirations, here's all my different options. Here's my menu to choose from, what I want to buy or sell. So yes, it's a menu, all right? But a lot of people do not see past that, okay? To really understand how this strike ladder works and how it's actually a great tool for you, okay? And that's where I want to take you today. That's all this webinar is trying to do, is take you from thinking this is a menu to, it's a tool as well. And it can give me a lot of information, okay? Let's talk about how. So first of all, that visual I just said, if you drew a 0 up here and a 100 down here, that kind of makes a little sense, right? All right, and you can see that. Well, for any of you that have been on some of my webinars before, or you understand options, you've heard the term, OTM, ATM, ITM, meaning out of the money, at the money, or in the money binaries. Well, let's just talk real quick. Can anyone tell me what an at the money binary is? Anybody know? Anybody kind of tell me in a nutshell what an at the money binary is in general? Right. An at the money binary is simply this. Think about it. If at expiration, if a binary is either worth 0 or 100, what is right in the middle between 0 and 100? Well, 50 bucks, right? So you've got all these different strike prices, okay? Over here is the indicative price, like where the market is. Well, when the current market, when the current indicative is right close to where a binary strike price is, okay, where the strike and the indicative are right about the same. And I don't mean at expiration, I mean before expiration. Like right now, we've got an hour and 38 minutes. Well, when the strike price, okay, is real close to the indicative price, that binary is going to be about 50 bucks, right? Why? Well, because it's kind of a 50-50 probability, right? A binary is saying the market will be above or below this level at expiration, and this thing will be worth all or nothing. But before expiration, when the market's hovering right there around that strike price, it's kind of 50-50, right? It's like straddling the fence. Like, is it going to go up a little bit and be worth 100? Is it going to go down a little bit and be worth 0 at expiration? We don't know. So we're kind of 50-50 right now. You can kind of look at these binary prices like a probability. Does that make sense? Okay, so where it's right in the middle there, it's like, well, you know, we don't know yet. It's kind of 50-50. So it's priced around 50 bucks. So the first thing I always do when I open up a strike ladder, instead of looking at this as like a big, overwhelming piece of information, my eye automatically goes right in here to find about 50 bucks. And what do I know without even looking right here or looking at a chart? I can look right here and say, okay, these are around 50 bucks. This one right here, what do I automatically know? I know that's where the market is right now. That's currently where the market is. And if you can kind of imagine, I'm drawing an imaginary line right here. Right there at 50, around the $50 mark, okay, right in here. So like there's like an imaginary line in my head right there. And from there, I'm like, okay, here's the 50 mark. Everything up here is heading towards 0. Everything here is heading towards 100. I know this is my at the money binary, and it kind of splits this page for me. That makes sense? So why are these down here priced higher, closer towards 100? Well, look at this one. I can buy it for about 75 bucks. What does the statement say? That it'll be greater than 24,963. Well, right now the market's at 24,983. The statement's already true currently. The market's already 20 points above this strike. So if expiration were to happen right now, this one would expire in the money, worth $100, right? So the market's already 20 points above this strike. So as long as the market stays above this strike, this one will expire profitable. So this one's already pricing closer to 100. Do you understand why it's not priced at 50? Because at 50, it's like right at the same level, like, we don't know. Well, when the market's 20 points above it already, then it's going to be priced more like, you know, closer to 100. Makes sense? Because the market's already above it. Okay? Why are some of these down here priced at like 12, 13 bucks? Well, because this is saying market has to be greater than 25,035. Well, the market's down here at 24,983. The market has to go up like, what, 45, like 52 points for that to expire profitable. So that's a much lower probability for the market having to go up there. So it's priced lower because it's a lower probability. Yes, if that were to happen, you'd have a much higher return on this lower risk, but it's a lower probability. Okay, does that make sense? So if you open the strike ladder and you kind of draw a line right around 50, it really helps separate and visualize, okay, market's here. These are already in the money currently. These, the market has to move. What is my strategy or system telling me? What is the direction the market's telling me? How far do I think the market's going to go? Which one of these is my best strike, my best risk to reward? It kind of helps you really visualize. Okay? So that's kind of the first step there. The second step is this. Take a look at, and I'm going to switch over real quick here. Or no, this is fine. No, we're going to switch. Let me check something that might be a little simpler to use to show you here. Let me see. Okay. So if we take a look at these strikes right here, okay, notice the difference in these strikes, 1634, 30, 26. These are 4 pips wide, right? There's 4 pips difference between each of these, okay? So give me 1 second here. All right, there we go. So what does that mean? Let's just take a look at something. See this one right here, okay? It's priced about $51. I can buy it for $51, or I could sell it for about $50. See that? So if I buy a contract, if I want to get out of it, how do I do that? Well, then I have to sell it, right? So when I'm looking at a price I can buy for, then I want to know, hey, what price can I get out of it for? I have to look at the sell side, right? So right here, this particular contract is priced at $45, okay? What is this one 4 ticks further priced at? Because remember, these are 4 pips. So this one's priced at $44. This one down here that's 4 pips lower is priced at what? 57. This one here that's 4 pips, another 4 pips, 69, right? You see that, okay? So this one right here that's priced at 41, this is for the strike of 1606, okay? All right. Now, what about this one down here that's at 1602? And then this one, 1598. Meaning if I bought and the market went up, okay, you have to realize if I buy and the market goes up, I don't need to look up on this ladder to see what my binary would be worth. I look down. Does that make sense? Because let's say that right here, this binary, let's look at this one, 1610. It's the, about $30. Well, if the market went, okay, currently right now, what binary is 4 ticks lower, meaning 4 ticks more towards the money? Well, this one, right, at 1606. And it's priced right now at 41, not 30. You see that? So if I bought this 1610 and the market went up in my direction 4 ticks, 4 pips, well then now this one that's about 30, if the market went up another 4 ticks, where would this one be priced at? Well, it would be priced around where this one currently is priced at, 4 ticks difference. Did I lose anybody there? You notice how these are 4 ticks difference, right? So I can say, okay, if I buy this one right here for 44 and the market goes up 4 ticks, well, then this one would be priced about where this one is priced at now, because currently this one is the one that's 4 ticks closer to where the market is, or difference. That makes sense. Am I losing anyone there? Okay, remember we said if when they're around $50, this is what we call it at the money binary, right? Well, what if the market moved up to this number right here, 1610? What would, in this binary right now is priced around 32. But if the market went up and was at 1610 here in just a few moments, what would this binary right here be priced at approximately? Who can tell me? When the market price is right at the strike price, the binary's priced about what? Yeah, Stephen, exactly, about 50. Okay, so am I confusing anybody, or do you understand what I'm saying here? If I bought this one right here for $44 and I expected a 12 tick move of the market. Hey, markets I think is going up 12 ticks. Well, each one of these strikes is what? 4 pips, right? So I would count down how many? 3, right? It's 4 pips, 4 pips each. So if I bought this one right here for 32, and I think the market's going to go up about 12 ticks, then I'd go, okay, 4, 8, 12. So that binary I bought here would now be priced the way this one is. And what could I sell this one for? $68, right? So if I bought it for around 35 bucks, the market moves 12 ticks in my favor, then I could sell it for about 68 bucks and, a little more than double my money. Make sense? Okay, great. Well, what if I'm expecting a, 20 tick move of the market? Well, then I can look and I say, okay, well, these are 4 ticks wide right here. So what would it be? 5 strikes difference, right? If I bought this one, 1, 2, 3, 4, 5, okay, then it'd be worth about 78. Okay, then I might look and say, okay, well, with that kind of move, is there a binary I can make more on? Like, okay, here I could buy it for 34. If it goes 1, 2, 3, 4, 5, I could sell it for 85. Okay, so I make about 50 bucks. Great. What if I bought this one and it went 1, 2, 3, 4, 5, and I could sell it for 70? Oh, I might make a few dollars more. Does that make sense? Okay, good. Sarah says that's an aha moment. Perfect, Sarah. Okay, Sarah, answer me a question. Have you always looked at this as just a menu? I'll buy that one. Cool. Right? It's more than a menu. It's a tool because it shows you what a binary will be worth at a different level. Does that make sense? Okay. Because if this is the at the money binary now, look at this binary here that's 4 ticks even more in the money. Well, it's worth this much. So if you bought this one and the market went up, then this one now will be priced about how this one is. So it kind of shows you, based on the move of the market, what it will be worth. Make sense? So, little test here. Sarah, I'm going to call you out. If I bought this one right here, Sarah, for $36, okay? And I expected the market to move, let's say 12 pips, right? Well, we know these strikes are 4 pips each. So that would mean 3 strikes, right? So I bought it here for about 35 bucks and it went 1, 2, 3. It'd be priced about how this one's priced. So that means I bought it for 35. I could sell it for about 70. Not bad, right? Doubling my money. I'm pretty happy with that. Yeah. So that would be a pretty good option. Yeah. For those of you that are new, I'm going to call all of you out because I know you've done this. You're looking at these things, okay? And you're like, oh, let me check out this binary right here. What if I bought this binary? What if I bought this binary? Ooh, max loss $65. Max profit $34. Ouch, I don't know if I want to lose $65 if I'm wrong. Right? Anybody ever had that? Like, oof, 65 bucks just instant. I don't know. I don't know about that, right? Okay. What about this one up at the top here? What happens here? If I were to do that, oh, okay. I risk $7. I might make 92. Hey, $7, I can handle that. Let me place that order. I think the market's going up. I'll risk $7, no big deal. Raise your hand. You've all done it, right? You choose your contract based on your fear because of this number right here. Yes? Admit it, yes, you've done it, okay? So, Sarah, we had nice little option here, right? You know, buy for 36, it moves up 3, I can double my money, cool. Sarah, what happens if you buy this one for $7 and the market goes 1, 2, 3 strikes in your favor? How much can you sell it for? Oh, right. See the difference? Yeah, $1 and something. You lose money. Why? Well, because even though the market moved, you're still so far away from the market up here that it didn't move far enough to get above the strike. And if it's not above that strike at expiration, it's headed towards a 0 value. Exactly. You see that? So when you really understand this, it helps you say, what? I probably don't want these if I'm only expecting a 12-tick move, right? Okay. What about here? You can buy it for $75, $76. Okay. Or this one here, 87. Market makes 1, 2, 3 move. Look, they're not really moving very fast right here, are they? You don't really get much value there until expiration, right? Do you see here again, the middle? It's the middle ones that start to move for you. Everybody see that now? So remember when I said, hey, I pull up this strike ladder, what's the first thing I draw in my mind? I find about 50 and I draw a line because I know where the market is, right? What do you think the next thing is I'm kind of drawing in my head? I'm looking of where do these things start to move? If I got this $14 one and it went 1, 2, 3 strikes, okay, I could buy for 14, sell at 40. You know, that's almost tripling my money, right? So can you imagine I'm drawing a box like, okay, right here down to about right here. That's my sweet spot. That's my movement box. Above that box, they move slow. Below that box, they move slow. Does that make sense? So I'm not opening that and just looking at this as a menu. I'm looking at this as a drawing the line around 50. So I know these are in the money, these are out of the money. Cool. Where is my sweet spot of movement? Whether the market's going up or down, that's still the sweet spot. Okay? Because right in here, if I sell it at 66 and it moves 1, 2, 3 strikes up, I can buy it back for 30. Okay? Which is what? Buy low, sell high. I'm still doubling my money. So that's still kind of the sweet spot in there of movement. Does that make sense? You can see that's where they start really moving. That's where I want to be if I want to get in and get out. You know, like I said, I want you to think beyond just holding to expiration. I want you to also think about getting in and, getting in and getting out for expiration. So any light bulbs there? Sarah, you said, a little bit of light bulb. Does that help anybody look beyond a menu and look at this a little more as a tool of which binaries are best for me to look at? compared to others that might not get me where I want to be. Because I know that when you're brand new, you're looking at these lowest risk ones down here saying, I think the market's going up. I'm just going to buy this cheapie. But then you hardly ever seem to be making money because you're like, well, the market did go up. I was right. It went up. Why am I not making money? Well, because it didn't go up enough. And you got one of these that's so far out there. Okay? So it helps you determine where is my sweet spot. But here's where it really helps you. Okay? Okay? Well, here's where it really helps you. Let's say that your and I'm not going to spend all day on strategies and systems and levels. We could go all day and week about it, right? But let's just say, as an example, let me pull up a chart here. Here's a chart of the Dow, right? As a total example, this is not a recommendation. This is not advice. As you can see, I don't even have any indicators on this chart really, except my deviation levels. Let's just say that, as an example, let's say I had that my strategy system was telling me to go long. Like, I think the market's going up. Okay. Well, I mean, let's bring this chart in quite a bit here. Well, I mean, the market's made some pretty good moves here, right? I mean, it's come down. It was way up here. It's come down and down and down and down, right? Well, notice these levels on my chart: settlement, half a deviation, -1 deviation, -1.5. These are not regular deviation. These are apex implied deviation levels. They are super spot on. The market is attracted to these levels. The market, will reverse often at certain of these levels. It will chop at certain of these. I mean, just look at, by the way, these levels are pre-printed. Like, they're printed for the next day. I already know what these levels are going to be. Look at today, by the way. When the market opened up here at settlement, I already had all these levels on my chart at 8 o'clock last night. Where is the first place that the market chopped? See it right there? Boom, came from settlement straight down to boom. Half a deviation level. Where did it chop? Literally right there. See it? 0.7 Deb is, it's not as strong. But right here to -1 deviation level, almost to the tick. See that? And then it bounced off of that, came where? Almost to the tick to this deviation level. Played at that Deb level, played at this Deb level. You see how it's attracted to this level, right? Then what does it do? Then it comes down here to this 1.5 deviation level, and notice that's where it's sitting there. Okay? Now, maybe you use deviation levels. Maybe you use support and resistance levels. Maybe some of you use Fibonacci level, whatever. If my strategy system right in here was telling me, hey, you have a trade entry to go long. Your strategy is telling you the market's going to go up. If you step back, breathe, use your brain a little bit, look at your chart. If I had an entry right here to go long, where is the market going to go? I don't know. It could go way up here. It could go way anywhere. But where do you think my first target level is going to be? Or where do you think my first level where I really expect a battle or a slowdown or some chop? It's pretty simple, right? It's at this level, the -1 deviation level, because that's my next major level. That's the level where the market hit, boom, hit, boom, hit, boom, came back to, hesitated around. That was the last big support resistance level. It's the next big level that the market would have to make it through on its way up. Does that just make kind of elementary sense? Yes or no? Everybody follow me? If the market is right here and I had a signal to go long, where should I just expect ahead of time to maybe get a bounce or some chop? Right here. Make sense? Yes, no? Is class awake? Okay. So, is it smart of me to say, well, my system said to go long, so let me just randomly slap on a $7 risk binary up here because I like, the $7 risk. I don't like to feel scary about anything bigger than that. Do you see that? Does that make a lot of sense to do that? Just choosing some cheapy one out here because you like the risk. Is that realistic? Does it make sense? Not really, right? So, but what can I do? What can I do? Well, here's what I can do. This is key right here, guys. So right now the market is where? 24,970. Everybody see it over here to the right? 24,970. Yes? Where is this next deviation level? 25,046. Okay? So 25,046 minus 24,970. So it's about 76 points away from that level. Make sense? Everybody follow me? 76 points away. Okay, so this is the Dow, right? So let's hop on back over here. Let's go to the Dow. Let's go to indices, binaries, Wall Street 30. Okay. What is the strike difference between each one of these strikes? 23 to 11, 11 to 99. See them? How wide are they? 12 ticks. So how far are we now to our next big level where we expect a reversal, a slowdown, a chop? 76, remember? 76. 76 divided by 12 equals what? About 6. So that means I'm potentially expecting a 6-strike move to that next level. Yes? Everybody follow me? Did I lose anybody right there? Okay, so Sarah, from here, okay, where the market is right now, see it? Up to this next level where I'm expecting it to possibly go. That's 76 points. You follow that? Okay, so that's kind of my first target, 76 points. Okay, so this chart here is YM, it's the Dow. So if I go back over to Nadex and I'm looking at the strike ladder for the Dow, look at these strikes, 25, 023, 011, 999. There's 12 points difference between each one of these strikes there. See that? Okay. So if 76 points to my next level divided by 12, because there's 12 points between each one of these strikes. Okay, so that's about 6 strikes. Does that make sense? Meaning right here, if the market's right here and it went up 1, 2, 3, 4, 5, 6 strikes, then the market would be about right here at 25,035. You follow me? Okay. So, but value-wise, I would count the other way, right? Because I'm buying, so as the market's going up, it's getting deeper in the money towards 100. Remember? So if I'm expecting a 6-strike move to that level, okay? Is this making like sense? Hey, I get a direction to go long. That's where I'm expecting to go. That's where I'm expecting to hesitate. It's kind of ridiculous just to randomly buy something out here. This is the move I'm expecting. 76-point move. Okay? What does that convert to? About a 6 strike move. Cool. So if I buy this one for $4 and I'm right, and I get a 1, 2, 3, 4, 5, 6 strike move, might be worth about 22 bucks. Long as it happens in time, right? Okay. If I buy this one for $18 and I get a 1, 2, 3, 4, 5, 6 strike move, I can sell it for $89. All right. Or I could look at the, do you see what we just did there? What about this one? If I bought this one for 78 bucks and it went 1, 2, 3, 4, 5. Okay, I can make, from 76 and only about 20 bucks. Do you see how you can use this strike ladder to tell you what price your binary should be worth at what level? Or if I have an X number of expected move, which one's going to give me the best return for my money? Does everybody kind of follow that there? When you have a target level and exactly, Sarah, you calculate your move instead of guessing. And you can say, hey, that's my target level to that, previous deviation or support resistance. How many ticks is that? So if I'm right and the market makes that move of that number of ticks, which binary gives me the most bang for my buck in value based on that move? And it's kind of a roadmap. It's kind of Google Maps for you. I'm telling you the best route to get there, the best bang for your buck, instead of just randomly throwing out cheapy random out of the money binaries or random in the money binaries. Okay, does that make sense, guys? And we'll build on this some more, in some upcoming webinars, but I want to just kind of set that stage with you and help you realize how valuable of a tool this is, okay? And especially for some of you that are new, okay? Do you see that this is a lot more, the strike ladder is a lot more than just a menu to choose from and order off of. It's a huge trade management tool. Helps you choose the right ones, know what the value is going to be, see, what's the best option for you when you can target different levels. Okay? Couple aha moments, any light bulbs? Okay, good. Hope this was really helpful for you. Start playing with this. Start looking at this. Like I said, we'll build on this. You can watch some other webinars, but start playing with this during your trading, taking some trades and demo to see this visually, how the values of different ones move, okay, quicker, and how that all works, okay? All right, guys, once again, thanks for joining us here on a Friday afternoon. I hope you've had a great trading week, and I hope you have a great and safe weekend. And, also hop on over and visit us over at apexinvesting.com. We've got, a bunch of free education over there and step-by-step courses on binaries and spreads and some free deviation levels. Those levels I just showed you right there, those are free. All right, hop on over. You can get those free at Apex Investing if you want to check out some of those levels. And, we're here to help and answer any questions for you. Hop back over to nadex.com, get signed up for some of the upcoming webinars, and we will see you on the next webinar. Thanks again for being here and for your questions and interaction. Have a good weekend. We will see you soon. Thanks so much. Have a good one.